It has come that time in which we will welcome back in Tech Trader for his weekly segment. Good morning, Sean. How are you?
Good. How are you doing?
I'm doing quite well. Thank you very much. Well, we are on the preface of earnings season, and we've got some big ones to talk about in the coming weeks. But as we always do, let's get the latest reading on what your sentiment is as far as the NASDAQ in general goes. Anything changed from last week?
You know, I mean, it hasn't really, because we kind of just keep getting this elevated sentiment, but nothing, nothing changes. I guess we don't have a spike up. I mean, it's kind of the same thing. And by the way, sentiment doesn't necessarily change quickly. It's kind of the same condition we got around all the three corrections last year. The market gets a little thinner, leadership gets narrower, indices still kind of go sideways or go higher, and eventually you kind of just run out of buyers. So I don't know when that exact point is, but put it this way, its sentiment does not look like it looked, in December or early January when buys were majestic and fantastic. So, there's not, whatever you're buying now, unless you're kind of gravitating towards kind of my kind of ideas, which are deep value, really cheap stocks, really great valuation, really good long-term theses that's still cheap. There's a few of those out there, but it's not what's really moving the market. What's moving the market is kind of basically the cloud stocks have replaced the FANG stocks. So instead of having, a FANG melt up, we kind of have a cloud melt up, but it's the same general market condition, narrow leadership. So, sentiment is doing a very good job of kind of showing that same statistic. Like one thing I look at, it doesn't ring a bell. But like the bullish percent index for tech is 92. As of last night's close, it was 92.65. That's pretty high. I mean, it was quite a bit lower than that before the big FANG meltdown in late last year. By the way, that's about the reading it had in either the January or was it February or March. We had two early corrections last year. That's about the reading. So the things I look at is like, so bullish percent tech 90, almost 93%. Bullish percent Nasdaq 100 83. That's also a very high reading. Anything really above 75 is very high reading. Conversely, bullish percent on the whole Nasdaq is 54%. So the Nasdaq is relatively benign, kind of as we talked about last time. Institutional buying basically peaked in kind of mid to late February or early March. A lot of stocks have actually corrected. I mean, the one thing I like or even love about this market is there's plenty of things you can soak up that are cheap. So in other words, there's plenty of names. I'll just point to BIDU. I mean, BIDU had a great rip to almost 190. And then it's kind of just retesting, the 170s. I mean, people make a big deal about the point move. I mean, this thing's only moved about 10%. So bounced about 10%, gave up. Might not even be that on total percentages. I guess it is. It's 20 points. So, basically had 10% move higher, kind of gave it back, but basically back to where it was. But 3 times net cash in investments. So at least in a market that's extended, and it's being led by very narrow leadership of literally ultra expensive stocks, you can still find pretty good values. Bloom Energy has had several reports that with growth as high, if not higher, than a lot of the cloud software names. Very cheap stock. I picked up some PBYI yesterday. In fact, I was looking at Damon's notes on that, and I don't know if I posted this before. There's plenty of things I trade I don't post because they're ultra short term, or maybe they're a little too speculative. But I traded this name in Q1 really nicely. Again, I don't know if I ever wrote about it. So then I was starting following Damon's work on it. The one I don't know how well people know this name, but you basically have might be the only legit. I don't know if legit's the right word. put it this way, it might be the only value name in out of all the pot plays. And what I say that is you're basically getting the whole pot business, I guess, for free. I mean, you got to trades at something like, I don't even know if this is right, 0.09 times sales. So this is a tobacco company, like a lot of these pot plays are. They're tobacco companies that are investing in cannabis and CBD and stuff like that. So, but you've got you got 1.8 billion in revenue and a 172 million market cap. So the question is, hey, does the pot revenue, cannabis revenue, replace the tobacco revenue? And I would say I don't even know if that's really a tough call, because tobacco revenue is diminishing slowly, and you've got material cannabis growth and catalysts out there. I'm trying to remember the last call. Now, this is not my work. This is an analyst on the call said something about, I think she said her run rate. Now, I don't know the year. I don't think it's this year, so my guess would be next year. But her run rate on marijuana revenues for them was something around $500 million a year. So if you look like, so let's assume that's a year out. If you look at something like a TLRY, which I've maligned heavily, especially when the stock was at highs. It's 50 now. What was it, 300 at one point? I think it was really tough to get a borrow then. So they're trading about 112 times sales, which sounds crazy. But if you do go out a couple years, and if you believe their projected numbers, you start looking at a $300-400 million run rate. That's more like 11 to 14 times sales at the current market cap. So let's just assume, let's assume that PBYI does even half that analyst projection of 250 million just in cannabis revenues. So you've got 250 million of cannabis revenues being valued at less than 170 million market cap. And then again, you got a whole $1.8 billion tobacco revenue stream that I guess is negative value. So this sort of looks like Yahoo. When I was buying Yahoo in 2012 and early 13, so you basically could make a pretty good case that Alibaba was worth, I don't know, I can't remember the exact. I think I had the Alibaba stake plus Japan Yahoo and things valued at, I don't know, $40-45 a share, and I was buying Yahoo between $12.50 and $15. And so that I was looking at that one of about three ways. One, so I'm either getting all the Alibaba shares for 1/4 value, then I'm getting. By the way, Yahoo had something like $6 to $8 billion in cash at the time too, which was, I think, were $6 or $7 a share. So I was getting the cash, I was getting Yahoo, I was getting, they had a $4 or $5 billion revenue stream on their own. I was getting lots of stuff for free. So the market essentially was assigning like a negative 28 to 30 point value on Yahoo's existing business, because we all know what ended up happening to Yahoo. And I'm not looking at the Yahoo today. I think it's trading like 80 or 90 on the Alibaba stake. I'm looking at the sort of the first year or two of when the Alibaba IPO came out. Yahoo easily went to 40, 45, 50. So this kind of looks like one of those. Again, I don't know this as well. I haven't done a deep dive on the balance sheet, but I've listened to the last couple calls. They definitely have plenty of revenue coming in from the new business, the cannabis business. So, you're either getting the whole cannabis business for less than free, for like a negative value, or you're getting $1.8 billion revenue stream for a massively negative value. But if you just kind of, again, just say, look, unless you believe TLRY is going to go to like $5 a share, which I don't know, I guess it still could, but assuming TLRY is sort of rational right now, I'm not saying it is, but if it is, and you want to give, PBYI a 10x multiple on their coming marijuana stream, you got a 9-bagger here. I'm not playing it for that. I'm just saying if some of these cannabis valuations make sense. Now, my argument would be that they don't. whether it's a TLRY or whether it's a Canopy or whatever. I think they're all kind of overvalued. I've kind of jokingly said, you know, you got companies that have to grow a crop, trading at software multiples. Software you can digitally print an infinite amount for free. Cannabis, you have to grow it, and it's got to grow. It takes time to grow. So my whole argument is the space isn't worth 10 or 15 or 100 or 200 times sales, but people are excited about the space right now. I think the one thing is very clear. I think PBYX is very undervalued relative to the space. So, you know, we could make an argument about what cannabis stocks will ultimately trade at. We'll find out, you know, in 6 months, a year, 2 years from now. But even if you sort of say, look, let's give these pot stocks, you know, multiples that are half to 1 quarter what they're currently trading, I mean, PBYX could still be a 2 or 3 bagger, or more. So, you know, we'll see. They have to deliver on what they've said, but the growth is there. And, you know, pretty cheap stock. Pretty cheap stock. Again, I think it's I can't find another value in the cannabis space. So, you know, it is what it is. I'm not going to make my living trading pot stocks, by the way. I'm going to make my living doing what I've been doing for 20 years, which is trading tech and finance and energy and things like that. But this is you know, I hunt for value, and this looks like pretty good value. So, and then there's you know, there's plenty of things like that out there. So, you know, I don't know. I see no need to chase anything at highs.
All right. So in the case of PBYX, incrementally, where are you adding to this particular position?
I think I posted on it yesterday, 1870 or something.
Yes, I know, TECHT. I know you posted it, but you remind us we have an audience who might not have seen it.
Just did. There you go. 1870, 1890, whatever I wrote about it yesterday.
Okay, so you just added. Like live trade from TECHT. Look at that.
Well, no, yesterday.
Oh,
yesterday.
Oh, okay. Well, yeah, but what do you do every $3 or so, right? 16 would be your next ad.
I'm a buyer lower for sure. I'm trying to remember what I think I was buying at 14 to 15 a quarter ago. I probably sold it, I don't know, 23 to 25. It went to like 30. So yeah, I mean, you know, the closer it gets to the first quarter lows, better. But you know, this is a story that's getting more known. But it's like anything else, though. You know, once so it was being driven on momentum. Again, got to 30, didn't hold it. I mean, you can. This is a good chart because you can almost see the stop levels that you know, people that don't know the story or don't have a fundamental hook are using. So, okay, somebody's obviously, you know, people are trying to buy at 30. Okay, you know, they hung in there. Maybe they bought lower. Somewhere between 25 and 27, they got flushed. Then maybe you got another round of buyers at 25, a different crop of people. Didn't hold, you know. Okay, what was the flush? There was a kind of a flush day, 21-ish. That didn't hold, you know. So anyway, I mean, this, you know, it finds a floor wherever it finds a floor. I'm not too worried about it. I actually bought it with like my whole plan was just to hope that it was going to get cheaper before their next report. When it was sitting there at 30, I was like, well, there's no way I'm not going to buy it. You know, not going to buy it at 30 ahead of the report. Well, you know, in 2 weeks it went from 30 to 19 or less. So, you know, in the high 18s, I was like, yeah, I mean, this is a good spot. I'll take my first tranche ahead of the quarter. I hope it goes cheaper. I hope it goes to 15. I mean, this is I guess, the difference between me and a lot of other people. They want to keep buying stuff as it's going higher, and there's nothing wrong with that. I buy plenty of stocks as that. I bought Twitter as low as 14. I've bought it as high as, you know, 31.50 or 34. So, you know, I have no problem buying Twitter at double the price, my low purchases, but I'm much more cautious of buying things on the way up. You know, whereas everybody else wants to run and hide and sell and stop just because price is dropping, then I'm kind of looking for opportunity. So yeah, no, I mean, if it, you know, I'd relish this if it went to 16. I kind of don't think it. There was another reason I kind of hit this technically. There's I don't know if you can see this, but there's sort of almost like a hidden support. If you basically kind of draw a line or even a couple lines, 1750 current price, 19. there's like a couple long bars. I guess I'd call this thing like a reverse, I don't know, some kind of candle I used to know the name of, maybe an inverse hammer or something back in November. So there's kind of a natural sort of point here. So it's not at a low support point, but it's sort of at, there's almost like, there's kind of like two shoulders, extended shoulders on the side of this. So you got a low at around 12. You see what I'm talking about?
I'm looking at a weekly chart, and I see what you're kind of talking about, the two shoulders.
Yeah, I'm looking at daily, but there's a really defined two down bars as it was coming down from 21 to, let's say, 19, or maybe even, if you want to go lower, there's the next support point that I'm targeting, that 16 level, is even easier to see. But there's a pretty defined level here at between 18 and 19 bucks. It's kind of imprecise because you have big bars there. But then on the upside, same thing. You have this brilliant spike from like 12 to, in fact, I think it is 16 and change. And then there's another bar, and I think it's the next day's bar, that goes from like, I don't know, 15.40 to, 18 bucks or something like that. So I actually do think there could be some pretty sticky support somewhere close, within, let's say, 50 cents to a buck of the current price. But this is a wild one. So I mean, the one thing I'll say, and everybody's responsible for their own risk management, but I'm like, look, if you're going to trade something, and you're going to write in and say, hey, I have massive anxiety because the thing's dropped $2, then probably shouldn't buy the name. Because this thing can move 2 points in a half an hour on no news. I mean, it's just a wild stock. But I gave it a pretty wide berth. I mean, I was tempted. I mean, I almost bought some at like 25.50, and I'm like, nah, I'm gonna wait. And I was looking. I think the day hit 23, and yeah, I don't know. So it didn't hurt, by the way, seeing Scalp's comments on it yesterday. That sometimes it kind of helps seeing somebody else. I mean, I don't really rely on the commentary of others, because I'm doing all this fundamental work, and most people are trading price, and since I don't really trade price, other than I'll buy price and I'll sell price, but I'm not. Price doesn't get me to act. But definitely to the degree that I can see other people putting information out. And I think it's high value information, and I think his commentary on PBYX is definitely high value information. So, and also, Damon is more, he pays more attention to some of the more speculative areas like the cannabis group than I do. So, yeah, I certainly like the fact that he was commenting on it. I'm like, all right, I think this is a pretty good spot. But the only thing I'll regret if it goes to 30 and I only have a third on, I won't be real happy. I'll be happy that I have some on, but I really do want to kind of add at least one more leg to this, if not more. So we'll see. I don't know if anything. So transitioning to coming earnings reports, it just seems like most things are kind of being contained, maybe even drifting lower until they get closer to the report. Except the most expensive stocks. Most expensive stocks, have buyers in them, and they might be in for a rude awakening this quarter as well. So the bottom line, though, is I think I'm not too worried about having a big move higher, until they report. I don't even know if they've released their earnings reporting date yet either. So I'd have to look at when exactly they reported. I think last quarter they reported around early mid-February. So they have a couple weeks left. But yeah, I'd be pretty surprised if I don't add at least another piece. I might be forced to buy it a little higher, because I probably will add one more piece before earnings.
All right, well, let's talk about something that actually has earnings very, very near, and that's Netflix. This one's trading right around the 360 area. I was surprised by a downgrade, an upgrade from Deutsche Bank right in front of the print yesterday. Are there any shenanigans going on, or is this a legit upgrade?
I don't know. In fact, we could have a whole call on sort of some of the crazy analyst activity. Some of the, literally nutty upgrades. They remind me of kind of 98, 99 upgrades on quite a few stocks recently. I don't know if I'd call Netflix one of them. I haven't read that one specifically. I would say most of the Netflix commentary, it seems to me, now I could be wrong about this, but I think the bulk of the Netflix commentary, I'd say the last month, has been, I would say, neutral to negative. So this might be kind of a balancing act. More people have been negative than positive lately. So, maybe this guy's kind of trying to come in and be a little bit contrarian, although, being bullish on Netflix isn't really contrarian.
I was going to say, that doesn't sound all that contrarian.
No, but there have been some negative commentaries. They went down. Didn't they go down a lot the day Disney went up like 13 points? I think they've had some near-term pressure from, the fact that a lot of people are kind of trying to do similar streaming things. So, the stock has gone. Stock had just a vicious up move. And, you can make a case that since January 16th, this thing really hasn't done anything. So it's vacillated. But since January 16th, stock hasn't done anything. So, I don't really know. I think here's the best thing I'll say about Netflix. I think Netflix in many ways is going to be how I evaluate and trade many names this quarter. So I don't have a position in it. I wouldn't be long. For my discipline, I wouldn't be long the name in front of the print. But I do think you could get things. I think we might get a quarter. This might be a quarter early because maybe this sets up better next quarter. But we could get a quarter where you can short after the print on moves lower. That's kind of what I'm thinking. So because given the market where it is, the level of it, given the fact that there's been very persistent dip buying pressure pretty much this whole year, the whole year to date so far. My guess is that you might be able to get, a lot of times it's hard, a lot of times a short is tough to short if you get a big gap lower, and then it's tough to short. It's almost like the setup last year, although I did it a few times, it was tough to short Facebook at 175 after it was 225, but it went a lot lower. And same thing, it was tough to short NVIDIA at 220 after it was just at 300, but it went a lot lower. It was so we could go on and on and on with tons of names, but we could get kind of a setup because my guess is anybody that misses, or let's just say has a report that's not as glorious, and maybe it goes down a little, but maybe it doesn't really drop that much. So in other words, maybe you get a free look at the quarter, and then be able to make your decision and say, look, hey, if these numbers were really bad and the quarter was bad and there's not really many sellers of it or the selling isn't very violent, you might get a pretty good shot. And the one thing, if you're doing options, the implied volatility, the price of options that you're paying is way, way cheaper once the print's out of the way. Because, paying any option premium ahead of a print, you're paying a ton of premium just to see the print. So, literally the day after the report, even if the stock moves, sometimes you get a stock that's moved, 15, 20, 25%, and the options are cheaper the next day, even after a big move. So that's kind of how I'm going to look. I'm going to look at Netflix. I'm going to see what they do, if I like the numbers or not. I'm not a buyer of it, so they could have the best report in the world. I suppose if they said if they found a cure for cancer and Parkinson's and MS, and the stock was only up 30, I might buy it.
Netflix?
But I don't think Netflix is going to say they cure all the world's worst diseases. So that's probably the only way I would buy Netflix though.
All
that they
right.
somehow miraculously cured all the world's worst diseases. So you know, I'm probably only looking at it as a short, and I have to see the setup. But you know, at the same time, yeah, they didn't really have a bad quarter last quarter. I mean, they had a great. I mean, this was a great tell. We've talked about this. They had an absolutely great quarter before the fall meltdown. So, and that was one of my tells. You know, Netflix 1 to 2 days after they reported, they gapped up 30, 35 points on a superb quarter, no hair on it at all. 2 days later, even maybe it was a day later, they gave up that whole move, all the gains, and there was no buyers in Netflix. Now, it was a higher price then. I think it was substantially higher price than it was now. In fact, I'm going to look. Yeah, it was. Well, I don't know. Yeah, wasn't that much higher? I was probably 380, something like that. So yeah, we'll just see. You know, we'll see. I honestly think there's more risk. I think there's more risk to many of the cloud names that I've talked about, though, than Netflix. I think Netflix, you know, we all kind of know what they're going to report. You know, they have pretty solid growth, pretty good sticky retention. They've been battling plenty of streaming competition for a long time. They've carved out their niche. But it's an expensive stock, and you're paying a lot for growth, and you know that there's a lot of assumptions that growth is very durable. So we'll see. We'll see how durable they hang on to, you know, a 20 to 25% plus growth rate. If that growth rate proves to not be, if they don't sustain that level of growth, the stock is, you know, pretty overpriced here. So we'll just have to see. But like I say, I'm going to watch it, see, kind of evaluate it post report. But that's kind of my playbook for almost all the really expensive stocks. I'll have a few of them short into the print. But by and large, I probably won't have a lot of shorts into the print. I might be looking to put, you know, to position shorts after the print.
All right, so now we're going to hit on some listener questions. We're going to start with your opinion on NXPI. So I'll type in that in the charts, and
honestly, I kind of missed it. I mean, I really like this name. This was one of those names I wrote about and talked about many times into the year-end declines. I didn't buy it, but I was buying other things. So, you know, I wouldn't say I missed it, because relative to other stuff I bought, but at the same time, yeah, I guess if I wanted to lever up, I could. There's two names I do wish I would have bought, and we talked about Skyworks, and the other one would have been NXPI. In the semi space, the biggest one that got away was Roku, because I had Roku lined up for days. Well, not many days, but a few days where it was trading, I don't know, anywhere from sort of that around 30 plus or minus 2 or 3 points. That was my biggest mess up of a no buy. But yeah, NXPI and Skyworks were very attractive. Frankly, I think Skyworks was even the better buy. And that one I'm mad about. You even kind of spurred me one day to say, well, hey, you know, it's only 5 points above where you talked about buying it. You know, don't you want to buy it at 70? And you know, I should have, because I'd be up 21 points right now. Although full disclosure, I think I would have probably sold 85 or 86. But that still would have been a nice gain, and I think it would have only taken about 2.5 weeks. And I even said I liked that into the print. I just didn't buy it. So yeah, NXPI, I kind of feel like I missed it, frankly. I don't think I'd buy it here. You know, the semis are interesting to talk about too, just for a couple minutes. The semi of any group that has had the absolute most love and buying interest and buy-side support, really from everything, from buyers, from momentum players, and from analysts, on really a reporting period that was just dismal as semis. So, you know, aside from a few names that I actually pointed out and liked that had certain catalysts, the semi group really reported pretty poorly. But yeah, it hasn't dissuaded anybody. You know, they're still upgrading West. Now, Western Digital I bought 34 and 35, but now there was upgrade there. You know, they're still buying Micron. I haven't really seen a Micron quarter that I want to buy yet, or they won't give me a price level I want to buy. You know, I think most semis will miss earnings. and I don't think they'll guide very well. So at some point they're going to have to, yes, they're probably going to have a better second half, but we're getting a lot closer to the second half. There's still not going to be an Apple 5G phone. I don't think there's going to be a big Apple resurgent buying pattern. PC's pretty muted. I don't know. We'll see. I mean, so again, like an AMBA has very discernible catalyst. Qualcomm, if they could, I'm still waiting for this FTC decision that I thought we were supposed to hear something about literally 3 or 4 weeks ago. There's a few chip names that have very, very nice growth catalysts, but most of the group doesn't. Most of the group, there's no China trade deal yet, so that's going to plague a lot of results. Apple sales are not very good. Smartphone sales aren't very good. I think it's going to be kind of a core. You're going to have a lot of semis basically miss and guide poorly. So it didn't hurt them last quarter, but there's only so much forgiveness that people have. So I just don't think the setup is real favorable for the group in general. Again, there's very specific ones I like a lot. Aside from those, I don't really like the group.
All right.
So I guess if you don't mind holding stuff where the odds of having a missed report and a poor guide are relatively high, then it's your space.
All right. So speaking of 5G, we have a question regarding: do you think, or do you have an opinion of AirGain, AirGain, AIRG as a 5G play?
AI. I don't think I do. I think I was long this name a while ago. I'd have to go back and look. I think I remember trading this and doing fine on it. I think I moved off of it, but I don't know. I'd have to look at it. I don't have one. I would say, though, that my 5G names, I've had several posts on them, had a couple thesis pieces on them. I'm very, very bullish on the space. So put it this way: if you can find chip companies levered to 5G growth, those are going to be the ones that probably have the best commentary and the best reports. And there's a few of them. There's a few chip companies in that space, but it's more fiber optics. It's more specialty. The name I'm going to talk up. I'm starting to warm up to it. Is AAOI. And this has been a very maligned company. Again, was one of my probably my best short ever in my time at Briefing. Although my short call on the whole tech space and FANG was pretty good too. But as far as an individual call and against the grain was AOI at 95. And then went long, caught a really nice move off the bottom, kept the trailers down. I don't know, big, but it's a very, very small position. This is one I'm sort of starting to think about because they're another one that the quarter's pretty easy to map out. There's probably not going to be much to like in the quarter, but at 1265, it's basically great. Plus, you had a comical downgrade yesterday. So by my work, I think I published this too. I think I said that AOI has effectively lost Facebook a quarter or two ago. Certainly lost 100G and lost a lot of sales. They've basically been losing the bulk of their business at Facebook. That's been known for roughly 2 quarters. So the piece yesterday was talking about quote unquote losses at Facebook. I don't know how that's new information at this point. So what is new information for AOI is they're converting, they're morphing. So just so everybody knows, the reason that AOI went to 95 in the first place is they were ahead of the curve with the cycle. So they're very strong in a certain cycle. They sold a lot to data centers because they kind of had the best solution for a good price point. Well, so everything they've been doing, they've been taking pain now because now they have legacy products. Other people have better stuff. But basically everything they're working on, or at least most of the R&D they're working on, is 400G and beyond. And in fact, one of their 400G solutions is really an upgradable solution, which is somewhat unique in the fiber optic space. So I think they said they have capability of pushing that particular package to 1.6. Is it terabytes? So it's 400. Yeah. So it'd be 1.6T. So, but basically AAOI is going to become a 400G story. It was a 40 and 100G story before. It was data center growth play. So now that speed, if you will, has been heavily commoditized. They're not selling the cheapest gear in that space. Other people are. Other people are winning business that used to be theirs. But as the data center moves to 400G, if their product is pretty compelling, I'm hearing it is, they could have another growth cycle again. So that's one. I mean, that could be a really sneaky 5G play. One of the stocks I said is one of my favorite 5G plays when it was half the price it currently is Acacia. I still think it's got plenty of upside. And then, people can read about all the different stuff I've talked about with 5G. CommScope I've talked about several times. I think I've lost count how many times Comm's been upgraded, by the way. I think 4 upgrades in like the last 2 weeks. It's actually kind of irritating me because I keep wanting to buy it on weakness as other there's been a persistent selling of cheap names too. But yet Comm hasn't been sold. Well, every time Comm starts correcting, it seems like there's an upgrade. So that thing's been upgraded 3, 4, 5 times. I'm not exaggerating. It's been upgraded a ton of times. Adtran reports tomorrow. I think that's kind of a sneaky 5G play. So I get a lot of names in the groups. I guess that one, I don't really feel I need to go after it or find a new one. And two, like I say, I like the set of names I have. I'm pretty stocked up on them. And many of them have plenty of upside. Most of the 5, aside from Acacia, which is doubled off of lows, most of the names still have plenty of room in my view.
All right, and we got one in on the ticker FIXX. I know it's a biotech name, but you've commented on biotechs before. Homology Medicines, this one is.
I don't know if I've ever heard of it. I don't like bios really. I think we've talked, but I do. I will go after a biotech stock if I think people are being stupid on it. Yeah, I don't even think I've heard of that. I can't. I'm honestly shocked that the market's giving me ICTP again at the same price as I was buying it before. So I added to that. It's a couple points lower now. Don't really care. I might add more, but I got a stake in it again. And yeah, it's like, look, did they just forget the last like 4 to 6 weeks? I don't know. People can say that data is negative. It's good enough data that they're gonna submit it to the FDA for review. I think that drug is anywhere from a $1 to $2 billion per annum drug. ICTP has an existing pipeline which is growing. I think roughly 30%. The revenue's growing about 30% right now. So I don't know. That's kind of what I do. I look at biotechs, and once I have a few, I don't keep hunting for new names, especially if I have a couple of quality. Here's another one that is interesting. Puma. Do you know that symbol?
Not offhand.
That's PBYI. PBYI. They had an approval. Stock spiked to 43. It's back at 33, 34. It hasn't filled the gap, but I don't know. That's something that lines up, I think, pretty well. That's something I'm looking at. Adamas has not treated me very well, but same thing, has had a big sell-off post-approval, post-earnings release where they had, 70, 80% growth. They chose not to guide, or they chose to suspend their guidance. I don't think it's because sales growth is going from plus 75 to negative. I just don't know if they know exactly where the sales are going to come in, so therefore they chose to be a little conservative and not guide. But again, that thing's been cut in half from an already low price. These are all spec names. I don't do any of these big. People can do whatever they want to do. The only one that I would say I have like sort of I guess what I call core investment thesis sort of conviction in and due to quality is ICTP. The other name I would say, and I'll end with this. I think you're basically getting BMY I can never say you're getting a stock for free when it's got a $46 price tag on it. But BMY at 46 is I think that's heads and tails the best buy in big pharma, in big bio. I'd much rather buy even Biogen. You know, with this recent $100 haircut. I mean, I always look at Biogen every time Biogen gets hammered, but I'd rather buy BMY than Biogen here. But yeah, BMY. I mean, that's the criticism. Again, people just we're in a weird world right now. I mean, I've seen some of the strangest things this year than I've ever seen. And one of the strangest things I've ever seen is that people don't think their buy-of-sell gene is actually an immense positive. I think the people, so that's my view. I'll put it out there. I think the buy-of-sell gene, especially the price they paid, is an unbelievably immense positive. And the fact that there's people actually want to break that deal up is, to me, completely stupefying. But here it is at 46. As good of a safe buy as I've seen. I'm trying to think the last. I think this reminds me of like the 1999 or 98 setup for Pfizer, when Viagra was coming out. Expectations were low on it. Pfizer was dirt cheap at the time. I don't know if Pfizer tripled, but I think it almost did. So I don't know. BMY, very solid, very good company. I literally blue chip stock in every way. And the fact that they're able, I'm still sort of shocked because Celgene was one of the stocks I liked, if you remember, and I'm still shocked that they sold for the price they sold. I mean, I literally think they sold for 40 to 50 bucks too cheap. And so I don't know. I mean, I don't really. I'm not looking at that many names because I think the ones I just sort of rattled off offer me plenty of opportunity if I want to go after them.
All right, and then the last one for me here is regarding Goldman Sachs. They just had earnings. I can't remember if you're still involved in this name. I think you were talking about it before, but
no, I was playing this. I was playing this out. I believe it's still a focus list stock. Still in my focus list. I still think it's a bit massively, materially undervalued. I had some kind of option structure on it that expired. And, you know, I hate losing 100% of my option premium. In that case, it was actually good because I had put a Goldman Sachs on long on literally like probably 3 weeks into the 8-week sell-off at the end of last year. So I can't remember where I hit it. I don't know if it was 195 or 202 or whatever, but you know, maybe even been a little higher. But yeah, I had basically a spread structure on. Didn't cost me that much money. I mean, hey, I'm not afraid to say where I screw up. If I screw up, why I didn't put some fairly aggressive. I should have just bought leaps on it. I should have just bought like 175 leaps. When the stock was 160 or lower. I mean, that was like a home run, no-brainer trade of the century. But, you know, I ended up not buying any finance stocks. And again, I mean, the stocks I ended up buying at the end of last year or early January ended up doing better than Goldman. But I just think it's a very undervalued asset. You know, here's the issue, though. I don't know. I mean, to the degree that the bears kind of hammer on this low interest rate environment, lack of spread, it definitely hurts the banks, but the banks are very profitable. They're just not, they don't have a ton of growth. I mean, it's almost like, you know, I hate using this because this is kind of, it's been echoed a lot, but it's kind of almost like the banks have become utilities post 2009. So, you know, they're all really big, they're all heavily regulated, they're all super safe. They're basically printing machines. They just keep making revenues and profits. But they're not very exciting, and they don't grow a whole lot. But you know, I'd much rather buy Goldman Sachs than MDB. But you know, there's you know, I'd much rather buy BIDU than Goldman though. So I think that's the problem. The problem I have for the reason I haven't re-engaged personally with my own money in Goldman, I just keep finding ideas I like better. Morgan Stanley's another one. Those are the two. That I would favor. Morgan's problem, I don't know, Morgan might have even done better off of lows percentage-wise. But yeah, those two are very good franchises. I mean, I believe those stocks will be materially higher over time. I don't know, maybe I'll get a good correction again at some point, and be able to buy Goldman at, I don't know, like 176 to 180 or something. I think that'd be a very, very attractive level. So we'll just see. Yeah, I mean, I can't really find any fault with them, but I just don't have a stake in them currently.
All right. Well, I think that's a good place to leave things for now. Next week we should probably have a whole slew of earnings that we could at least preview, if not really talk about. Things really ramp up beginning.
Well, next week is a much bigger week. Again, this week we kind of get started though. I mean, we got IBM, Netflix tonight. We got AdTran tomorrow. We got Morgan. By the way, Morgan Stanley's tomorrow. ASML's tomorrow. We have Team is one of my potential short setups. That's Atlassian. You know, and then do we have a holiday? Is Friday closed?
Yes,
Friday's
it is
closed. Okay, so Friday's closed. Yeah, and then we start. We have, so this is the warm up week. Next week we start accelerating, and then the next week and beyond is earnings palooza time again. So I mean, I'm actually very excited about this earnings season. I think there's going to be just a ton of great trading opportunities. I think both long and short. I think it's going to be a much different quarter than Q1. Q1 was sort of just like, okay, bad report, buy it. Great report, buy it. You know, at least for quite a bit of the earnings season. There was maybe a week. There was a week and a half where we overshot. When we did have that mini, it was like a 4.5% correction, but it only lasted, I think, 3 days or 4 days. So, you know, I think this quarter is going to be quite a bit different than last quarter. So I think this will be just as fun of a quarter and just as exciting, if not more, than last quarter was.
All right. Well, then we will chalk that up to next week, and we'll revisit some of those, do some previews. We'll have a lot of stuff to talk about next week and then the coming weeks after that. So, TECHT, I'll let you get.
Yeah, no sleep for 5 weeks now. That's where it is. No sleep for 5 weeks.
Yep, that's how it goes over here. I'm the first one in the building, and I got to get in here even earlier during earnings season. So, yeah, I'm with you, buddy.
Yep. All right,
my friend. Thank you so much, and we'll look forward to talking to you next week.
All right, take care. Bye.
All right.